Today, Governor Lowe and the board met and they kept the cash rate on hold at 1.5% for another month. Now, it was an interesting February in regards to what's been happening globally, and I want to talk to that story because we start to see the GDP numbers from around the globe starting to be reported. And we saw, let's start with the US, we saw some very good GDP numbers coming through, and on the back of that, we've seen President Trump with regards to his sort of stimulus program around infrastructure, around potential company tax cuts, and also potentially around giving Middle America a personal tax cut as well. Now the markets, the stock market absolutely love that, and we're seeing the market move into record territory and some growth that we haven't seen ever before in terms of how quickly it's moving. So they're obviously confident that when they've got a president who is pro-business, they can see that stimulus coming through, and that's why the markets are moving so strongly over there. Let's go to Europe. We also saw, the actual results being better than consensus in regards to most economists' views on where we saw Europe moving. So that's a positive sign as well. Now, and we talk about Asia. In parts of Asia, it's really important to see our big trading partners. So our big trading partners such as Japan also had some positive GDP numbers, and so did the second half of 2016. We saw China start to move. Now, whether those numbers are true or not, but we've got to go by some consensus there in terms of what's happening around manufacturing, and we're starting to see cement and all the sort of raw materials. We're seeing a pickup in that, which is a positive sign as well. Now, when we come to Australia, we got a very good number in regards to our December GDP. So GDP was up 1.1%, which was better than consensus, and that was after our negative September quarter. So December, we finish off the year quite strongly. Now, that means that our overall economy is growing at 2.4%, which is better than most developed nations in the world. So congratulations to the Australian economy. Now, that being said, effectively we only grew the economy by around $5 billion in that 3-month quarter to December. Now, the long-term average is around that sort of 3.4%. So it's really important that we understand that getting the Australian economy moving into that area is going to be important, because we still are struggling with capacity in terms of people wanting to work and getting full-time work. So we are definitely seeing more part-time workers and casual workers. So, there's not full employment, and that's the spare capacity that Governor Lowe and the board are focused in on, trying to give everyone more work, which then obviously leads to greater disposable income and a better standard of living. Now, rounding off the data in terms of Australia, we did see some really positive numbers in regards to business confidence. So the NAB Business Confidence Survey actually popped from 6 to 10, which is the highest reading we've seen for a long time. So that's a really positive story. In addition to that, consumer confidence is also up in this time period as well. So again, we're starting to see potentially some confidence around that. Now, is that appetite, is that going to be enough of an appetite for the board to move the cash rate higher? At the moment, I don't think so. I still think, we again have that spare capacity in the economy. So I'm still of the view that interest rates are going to be on hold longer. But what it also does indicate to me is that maybe we've bottomed out. We did see some commentary from the RBA in regards to an appetite to reduce rates further, especially given the performances of housing prices in both the Melbourne and Sydney markets. And that is still a concern for the governor and the board. So I don't think they've got an appetite to drop rates anytime soon. And if anything, I think they probably want to look to the next rate movement being up. But again, I don't think that's going to happen for the entire 2017 period. Now, let's talk about property prices and what is happening behind the scenes. We have started to seeing banks like the CBA hit their speed limit of 10% growth in their investment mortgage book. And that's concerning, because obviously what that means is effectively the CBA and Bank West, which they own as a wholly owned company, is now going to have to slow down the amount of lending that they're doing to investors. Now that's concerning, because obviously that puts pressure on their margins, and so what do? They turn around and they start to increase the interest rates that investors are paying. Again, very disappointing, but that's what happens when you get this market intervention from APRA. The banks need to, make sure that their shareholders are also getting the returns that they expect as well. And so to do that, because it's too politically sensitive to increase interest rates to mortgage holders, mum and dad mortgage holders, but it doesn't appear to be as politically sensitive to increase the investor lending. So, even if interest rates did go lower, I wouldn't be banking on those rates being passed on to most consumers, as the margin pressures in the banks are more and more pressured at the moment. We're sort of talking about the margins being around 2 to 2.5%. So that's pretty low in terms of profit. So how do they grow profits? They've got to bring volume to the conversation as well. So rounding that out, interest rates on hold, still concerns around the value of property moving in both the Sydney and Melbourne markets. So I do expect to see some more pressure. And so if you are thinking about your own personal household, make sure you are factoring in terms of building up your savings buffer and building up your offset account for increased costs around mortgages, because I do think that even though the cash rate may stay low for longer, I do expect to see more of this, flowing through to other banks other than CBA. I suspect the big four and the others will start to take an opportunity to increase the costs of investment loans. Disappointing for us. On the positive side, for those who own property, most property is going up in value, and that's a good result for us. So from that point of view, rounding out, cash rate on hold. We'll speak to you next month.